Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with our friends Massar and Tim Stenovec. Welcome to our audiences across our Bloomberg platforms, television, radio, originals, and, of course, the folks still streaming on YouTube.
Still?
Still.
YouTube is huge.
What do you mean? Yeah. They keep on streaming. They keep growing.
Future.
Yeah.
I love it. Yeah.
Have you heard about those streaming services? Netflix, Apple Plus, all those things?
No, never heard of them.
He's a cable guy.
He's a cable guy. I love it. He's got probably a TV at home with those little, ears on it.
No, I don't. I don't have cable. I don't have anything.
Do you really not?
No, I just keep our radio,
Cord cutter,
our dial radio tuned right there.
Yeah.
To Bloomberg Radio.
1130 here in New York. Thank you, Romaine,
and
for doing
Massar,
that.
Thank you so much for that.
Absolutely.
Hey, did you guys see what's going on with money market funds? I was just kind of going through a couple of stories. Money market funds seeing the biggest weekly outflows in 15 years. So going back since September 2008. This is through October 18th. I thought that was pretty significant.
Did you say outflows?
Yeah, about $99 billion left U.S. money market funds in the week through October 18th.
I thought everyone was buying money market funds
because... what does that mean?
All right, that's an interesting story. Hey, Scarlett, I was just looking at the S&P 500 and what happened today, and searching for direction much of the day, swinging between gains and losses more than a dozen times. But then at about 1:30 today, just moved decidedly lower, and it's been there all day.
And we've seen volume pick up as well, certainly in the S&P 500. Notably, volume in TLT, the ETF that tracks longer-dated treasuries, really picked up. It went above average at about 12 p.m., right when Powell began speaking.
Yeah, absolutely. And I mean, look, these market ructions and the volatility around it, he was asked about that by David West, and he said, the Feds keep an eye on it as they should, but at least for right now, he seems pretty comfortable not actually taking any action on it. The Dow Jones Industrial Average lower on the day by roughly about 260 points as we wait for these numbers to settle. A close right around 33,412, down 0.8%. A similar move lower of about 8 to 0.9% for the S&P 500 that pins it right around 4,277 and change. The Nasdaq Composite down more than 100 points or about 1% on the day. And your laggard, the small caps, the Russell 2000 lower by 26 points or 1.5%.
Yeah, that heavier volume, and you are seeing investors really kind of run away from everything. Taking a look at the S&P 500, Scarlett, you've got 428 names in the S&P 500, lower on the session, 74 higher and 1 unchanged.
Yeah, and that is reflected when you look at the sector performances as well. Let's start with the outliers. Telecom stocks, which only basically has 3 or 4 members, up 2.6%. That is AT&T as the big gainer there. Software and services and media entertainment, they're notable in that they did not decline. On the downside, Tesla dragged the auto and components index off by 8.1%. Real estate investment trusts also losing about 2.4%. And diversified financials, that's really Discover and Blackstone dragging that index lower as well.
All right, guys, let's get to some of the individual gainers. Netflix, certainly among them. We were just talking with our Geeta Ranganathan. I mean, this one pretty much holding on to all of the day's gains at its highs up 18%, finishing the day with a gain of 16%. Top in the NASDAQ 100, top in the S&P 500. We know what it is, that big subscriber add, 8.76 million customers added in the third quarter, far exceeding analyst estimates. Best quarter for subscriber growth in years. And also the cash flow number. I mean, Netflix knows the streaming business, knows how to do it, knows how to generate a lot of cash. So definitely an outperformer. Dexcom, this continues to be on my radar, up another 2.2% in today's session, up 15% in the past 5 trading days. Maker of glucose monitoring systems, it's been under pressure because of this new class of weight loss drugs, concerned about everybody else going to get hurt in the process. Barron's earlier in the week saying this has been overdone. And you also had outperform rating come from Leerink Partners earlier in the week, and they put a $110 price target on the company. The stock closing at $86 today. Just want to mention AT&T. This was top in the S&P 500, also higher on the day, up almost about 6.5% here, raising its free cash flow guidance for the full year after posting mobile subscriber gains and profit that beat analyst estimates. So some really big outperformers in a day, a market day, equity market day, Tim, that was really all over the place.
Yeah, also some big underperformers. Got to start with Tesla, the worst performer on a points basis in the S&P 500, finishing the day down by 9.3%. It was a miss across the board, whether you're talking about profit, sales, or margins. And expectations were low already going into the quarter. We should note, we did speak to Dana Hull just a few moments ago. She described Elon Musk's mood on the call yesterday as dour and reminded us that he slow-walked the factory in Mexico and described Twitter as being an albatross across his neck concerning potential customers for Tesla cars, now associating him with everything that's happening at Twitter.
Was there a way to avoid that?
But not buying Twitter.
Okay,
I think
just
it's the way
checking.
to avoid
While you're talking on Tesla,
Yeah.
before you move on, actually some breaking news now. Toyota actually striking a deal with Tesla to use their superchargers, and I guess maybe that could end up being a material boost at some point, Tim. Remember, they struck those deals, I think, earlier this year with GM and Ford.
Yeah.
So kind of interesting that, maybe the secret sauce for this company isn't just selling cars, but kind of relying on that infrastructure that it's built out.
So now you can go charge your Mach-E there soon.
I mean, I would hope Elon would know that. I mean, if you got off Twitter, maybe you would see that.
X is what it's called, I
Oh,
think.
X, I'm sorry.
Let's go to Blackstone, the next decliner that I wanted to point out is notable today. Reported a 12% decline in quarterly profit to shareholders today. Higher interest rates, a pullback in deal making, hurting profits, finishing it down by 7.9%. And then finally, shares of Canada Goose actually plunging today to an all-time low, fell nearly 10% before closing lower today by around 4.4%. We had two different analysts, Wells Fargo and TD Cowen, recommending investors move to the sidelines. Warmer than usual fall weather not helping, consumers pulling back, not helping at all, but a record low for the company today.
All right, let's take a look at the yield space. There was a lot of activity there, a lot of it on the longer end of the curve, with the 30-year yield up about 10 basis points on the day, I should say. And that 10-year yield going to close out the day only up by about 6 to 7 basis points here. But we should point out, at one point on the day, earlier in the session, it did reach 4.992. And of course, everybody looking for that 5% threshold. We talk about what is now basically a 16-year streak where we've been below that 5% threshold. So there's a lot of concern here about what happens when we get to that threshold, and more importantly, if we go meaningfully above it. And we actually spoke with Vishal Kanduja over at Morgan Stanley. He actually said this could actually end up being the buying opportunity that a lot of bond investors are looking for. The idea that there is sort of this sweet spot here where you can sort of lock in that yield and still get some good price appreciation should yields start to come back down soon.
I talked about that with Michael McKenzie earlier today. I mean, there is a silver lining to all of these rates moving higher, and that's rates moving higher. The fact that you can actually get, 5% on a 10-year, for the first time in a really long time.
Yeah. And everyone's asking. I mean, it's, you always talk about sort of when you get these market inflections is, the old story was like when the shoe shine person or the taxi driver starts talking about it. And, it's funny. I mean, I got family members asking me about buying 10-year treasuries, and I'm like, I don't know.
You're like, I don't know. I just talk about it all day, every day. But I'm not going to tell you what to do.
I talked about my 20-year-old, like opening up an account. She's like, Mom, I did a money market because, I can get like 4 or 5% on it.
Smart.
Like,
there you go.
It's kind of interesting.
Taught her well.
Sounds like an economics major.
I do wonder, though, the flip side. That's great, right? If you want to kind of lock something in longer term without the risk, but at the same time, you do worry about this higher rate environment, whether it's on car loans, auto loans, on the mortgage industry. You do see certainly that impact and that slowing down.
All right, I want to just jump in here for a minute because CSX is the loan company that we're really monitoring here, reporting earnings. And here, the stock is lower in after-hours trading after EPS for the third quarter missed analyst estimates, 42 cents, a penny shy of the consensus estimate. Revenue did beat the consensus estimate. It was down 8% from last year, but at $3.57 billion was slightly higher than the expected $3.55 billion. Operating income of $1.3 billion matches the consensus estimate, and operating ratio was actually 1 percentage point higher than what a lot of analysts had anticipated. It was 63.8% for the quarter.
It's interesting. I mean, we've only gotten a smattering of companies so far, at least in the S&P 500. I think about 60-something companies so far have reported. But of course, we know that picks up in a big way next week with almost 200 companies. And I guess the question is sort of like, are we hearing the same thing from these companies? I know the numbers are going to vary, but when we talk about their commentary about economic conditions, about consumer spending or business spending, are they all singing from the same hymnal?
Yeah, higher fuel costs, it comes up quite a bit, certainly for the industrials.
Yeah, I'm looking at CSX, their press release, and they are talking about we are encouraged to see improving sequential trends in some of our key end markets. They talked about their merchandise business remaining solid, our coal operations delivering strong volume growth. So that to me sounds a little bit optimistic.
Did you say the part about encouraged to see improving sequential trends, Carol?
Yeah.
Okay, so that's something.
Didn't I say that?
know. Yeah,
I'm glad
you
you
did.
listened to me.
She did say it. I was actually listening for the first time, so I heard it. Yeah.
For once in your life.
But what becomes the next catalyst? I mean, we talk about Jay Powell, who was speaking a little bit earlier today, Carol, and then, of course, we have all those earnings. Is that it? Is that it?
I think we're all waiting for rates to really peak out, top out. And at this point, we went from talking, 5%, and now I'm hearing kind of a drumbeat of maybe 6%. So I think that's what we're trying to figure out. How high and then how long do we stay
Katie
at those
Kaminsky's
rates?
been saying that for months at this
I'm
point.
holding out for like 8 or 9%.
Oh boy, I mean, 5%.
I would literally like liquidate
Are you really thinking
my
8 to
portfolio and
9%?
just lock that in, given my age. Yeah,
5% is increasingly becoming
old,
the normal.
Carol.
It's the when,
need
not
stability.
if kind of question here.
And income.
No, it's
He's still going on about his high yields.
And that's the one thing I think about what Dana Hull said about Tesla. I know we've got a wrap here, but it's just interesting. She's saying, Tesla is this company that has been living in a, free money environment, and now they're in a very different environment, and that is something that Elon Musk is trying to get his head around. All right, guys, I've got David Weston. I got some more important things to do.
Interesting.
Continue this.
I had a retort to that. Do we not have time?
We got to run. Nope.
Okay.
Tomorrow we can do it. All right, that's a wrap for our cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We will see you again tomorrow.